We recently did a video around using the VA home loan with VA disability compensation, but it dawned on me that we didn't talk about veterans that want to purchase a home and they receive TDIU as their sole income or in addition to other income, right? So TDIU is total disability individual unemployability. So let me give a little bit of background on that because some of you may qualify for this and may not even know it. So this is when you have at least one service-connected disability rated at 60% or greater, or if you have two or more service-connected disabilities, with one of them being rated at least at 40% or greater, and a combined rating of 70% or more. You must also be able to show that you cannot maintain a stable job that supports you financially because of a service-connected disability. Now, marginal employment, such as having like odd jobs, do not count as substantial gainful employment, like that's per the VA. And another important note that I want to talk about is that you can still have a regular job, right? As long as you make at or less than the national poverty line based on dependents. It's really important. And also certain areas have different requirements. I'm going to drop a link below so you guys could take a look at that. Another thing with having TDIU at the 100% level is the regular 100% PNT disability and the TDIU, the income is rated the same, right? So it's going to be the exact same amount. And it's also going to depend on how many dependents you have, factoring into how much money you're actually bringing in. Okay, so now let's go through how that actually affects the VA home loan and that decision process from a lending perspective on how to be able to give you that money. So the entire TDIU compensation can be used to qualify for a VA home loan. Furthermore, we gross it up because it's tax-free, so we actually add an additional 25% to that income. Now, when you qualify for a VA home loan, I know we talk about this a lot, the VA and lenders look at both debt-to-income ratios as long as what's called residual income, which you could find us talking about that on the channel. So please check it out. And also, as a side note, please hit the like and subscribe button so we can get more education out to the veteran community around housing and subjects over that circumvent all of that, okay? Another thing with that is that if you are employed and your income is above that above the national poverty level, you can still use your TDI rating, right, to qualify for the income plus your regular job. Now, the downside to all of that is that if and when the TDI or TDIU gets reduced to your regular VA disability compensation, you will not have that money anymore in order to pay for your bills. So you really have to focus in on making sure that you budget correctly so you don't run into any type of issues. And the other part to that as well is that the VA doesn't catch up that fast to, let's say you get a full-time job making $100,000 a year, plus you're making an additional $4,200 a month from your VA disability. Well, if you just started that full-time job and it qualifies you for the VA home loan, well, the lender's going to use that full $100,000 income plus the $4,200 a month to qualify you for a VA home loan. But again, it's tricky because what's going to happen when that amount gets reduced and you're no longer receiving that? And again, you got to focus on that payment because the lender is not going to know that you have the TDIU unless you volunteer that information to that. So again, you're using all of that money to qualify. The other piece to that as well, which a lot of veterans, if they qualify for property tax exemptions, depending on where you are in the state, same thing is going to apply here. You don't get property tax exemptions for TDIU. That typically only applies to 100% permanent and total. And again, you have to check the state and the county's assessor's office to see how much you're going to be getting. Now, if your TDIU turns into a permanent status where you come 100% permanent in total because you went in and filed for an update, and there's plenty of awesome channels out there that talk about how you can increase your VA disability rating, because the VA can be a little bit tricky. I've also served in the military. It's definitely a daunting process at times, but it's 100% worth it, because it gives you such an ability, or more of an ability, to become a homeowner, because the VA home loan in general has a ton of awesome benefits to it, right? There's no down payment requirement as long as you have your full VA loan, meaning like you want to buy a $2 million house, you can do so with no money down. And obviously you can also purchase all different types of properties like single family homes, condos, a multifamily. So you can purchase an income property as long as you live in one of the units. Because we do that for a lot of people, especially if they have 100% disability rating and they have reserves, then they can actually use the future rent roll to qualify for more. And at the end of the day, most of these people are not making a mortgage payment because the tenants are paying for that mortgage. I think it's an awesome way to be able to leverage that. And we did a video recently around PCSing and building wealth. And I want you just to imagine something, that if you buy a $300,000 4-unit property today and your tenants are making all the payments for you and you don't have to pay a penny out of your pocket, I mean, you're going to have some repairs and stuff like that you're going to have to pay for. At the end of that 30 years, providing that the values haven't gone up, which I really don't see that happening, you would be sitting on a $300,000 asset that you didn't have to put a penny in. And furthermore, you've written things off on your taxes. You could get tax deductions for your interest. There's a whole bunch of stuff. Talk to an accountant. Don't do taxes yourself, especially when you have a multifamily, because there's so many advantages that you might not know about that you can actually capture and be able to utilize and pay the least amount of taxes, because who likes paying taxes? Another big benefit of the VA home loan is that you don't have to pay private mortgage insurance, which in itself, if you were to look at a conventional loan doing 5% down on a conventional loan, typically a VA loan with no money down is going to still have a lower payment, which is phenomenal for the veteran community. Now, how lenders determine what your income is going to be, or what your income is by your certificate of eligibility. And a certificate of eligibility does not include a disability rating percentage, right? You'd have to provide a statement of service from the VA for them to determine that. But typically, the lender's just going to look at the dollar amount, and that's what they're going to use to qualify you for the mortgage itself. You can get one on your own. You can get a certificate of eligibility by just going to va.gov. Or if you want, you guys could schedule a call with us, and we'll pull it for you and provide it to you, and also provide any education around using the VA home loan as you wish, right? Because we're here to serve the community, because it's an awesome community, and we want to pump as much information out to the people as possible. So the first step you're going to want to do is get pre-approved, so you know your financial picture. And once you do that, and we're also licensed across the country and its territories, so again, we can help you with all that. Then getting connected with the realtor to start looking at properties, and then once you find a property that you really love, the pre-approval is what you need in order to make the offer. And then you go under contract, and there's a lot of things that go behind that, which again, we have a ton of videos around that. Now, some of the successes, or how to be successful in your transaction, is to financially prepare. Because like I mentioned, if you're counting, let's say if you're not working and you're doing 100%, you have the TDIU, then listen, it shouldn't be too much of an issue, because you're going to be getting that income. The challenge comes in is if you get a job and then you don't receive it anymore and you get the reduction, does it make sense? But nobody can tell you that other than you by sitting down and doing your budget. It's also important to note that you finding the right property also is going to make a difference, because if you find the property that needs a lot of work to it, that might require additional assets that you need to be able to put into the property versus just a move-in ready. Everyone's handiness level is very different. And then the other thing that you really want to focus on is working with the right professionals that are savvy in working with veterans. They have experience with it. Not just telling you like, yes, I do VA, I've worked with veterans in the past, but how many have they worked with, and understanding their fee structure, because the top lender The top VA lender in the country overcharges veterans 2 to 3% on average in closing costs when you don't need to have that. So please share our information with the veteran community. Hit the like and subscribe button so you can get notified when we do videos. And we also do a lot of live events, being able to answer any of your questions. And if you want certain topics around the VA loan, also drop that in the comments section. We're always happy to help. You guys have a good day.